Good morning and thanks so much for joining in. You're watching NDTV Profit. This is Ask Profit and my name is Mathew. With me is Smriti Chaudhary and we'll take you through the next half an hour or so of trade. Now, take a look at the markets right now. You've seen that the benchmark indices have been under pressure all of today. In fact, the Nifty 50 trading below that 22,000 mark, which it held above in trade yesterday, is down about 0.9% as we speak. And there continues to be pressure in the broader markets as well. And you have the mid-cap index that's down about 1% or so, more than 1%. And you have the small-cap index, the small-cap 250 index is down about 0.75% or thereabouts. Now, you have to understand that despite the fact that you see more cuts on the benchmark Nifty 50 today, the broader markets have seen more of a sell-off in the recent weeks. In fact, the small-cap index is down over 10% at this juncture from the peak. And there is, in fact, pressure in a few specific sectors. The IT sector as a whole is down about 1.8. The index is down about 1.8%. A few of the stocks that are leading that decline, and we're going to talk about one of them in particular. You have the FMCG index is also down about 1.8% or thereabouts. You have the Nifty oil and gas space that is under pressure as well. Media is down. You have pharma that is down over 1% or thereabouts. You have healthcare that is down over 1%, and you also have, in fact, the PSU banking index that's down. In fact, all of the indices are down, but you have some that are losing less than others, and among them, you have the Nifty Bank that's down only about 0.25% right now. But we are focusing in on one particular stock that is down in the dumps today. It's Tata Consultancy Services, and it's proving to be a bit of a drag for the benchmark Nifty 50, but also for the IT index. And that's because of a couple of trades that took place, Smriti, this morning.
Yes, we have gathered from our sources that Tata Sons is looking to sell stake.
Has sold
actually now in Tata Consultancy. And the idea is for Tata Sons to pay their debt so that they won't have to list. But just to give you an idea, they've sold 2.34 crore shares at a price of 4,001 rupees per share. Now, we're seeing this impact on the stock itself today, which is down 3% in trade today. So the question is this a buying opportunity for investors? Should you now enter the stock? And for that, we'll get our guests in. We have Rohan Mehta, founder and portfolio manager at Turtle Wealth, and Osho Krishan, senior research analyst and technical derivatives at Angel One. Welcome to both of you, and thank you so much for joining us. Rohan, I'll start with you. Would you suggest from a fundamental long-term perspective, this sort of price correction is an entry point for investors?
Hi, good morning. If you see TCS along, we had seen 4 years of, now this is the 4th year of a consolidation with, decent numbers which has been posted, and the whole IT pack for the same, excluding some of the mid-cap IT's name. I believe that still, if you see this, not a correction, it is just pull up from its all-time high. But still, it has been a laggard for Nifty 500 outperformance if you see on the scale of outperformance of the market. I would still suggest and wait for the numbers which are going to come for this quarter and then come to any decision. It's a great company, no doubt about it. But we believe that still underperformance of this company will continue for at least 2 to 3 quarters. So we will wait and then come to any decision for this quarter numbers.
Right. And Osho, would you also suggest the same, to wait and watch for this stock, or should you buy at these levels?
Very good morning, Smriti. Well, if I'll be talking about the technical developments, then the cycle of higher highs has been maintained in TCS. Yes, there has been some kind of plunge, a massive plunge in TCS being a giant IT company. There is 3% correction that has happened, but these things should be considered as a healthy one. Although the company has sold the stake in the company, so that is something that can be having some repercussions on immediate basis. But if I'll be talking about medium-term perspective, then this counter looks very positive. On technical front, 3950, 3980 is the zone where one should wait for some accumulation. And once, if there will be any kind of dip towards 3950, 3980, then definitely one should try to gauge momentum or accumulate this counter for short to medium-term time frame.
So that's the view on Tata Consultancy Services, and you just saw on your screen the moving averages and where the current market price is in correlation to that. Let's take the questions now. And by the way, I forgot to mention, but I think a lot of you already know this. This show is geared towards getting you answers to all of your stock-related questions. So if you're tuning in for the first time, you can send us your question on WhatsApp. I'd encourage you to tell us your name and where you're tuning in from, so that you can know that this question is in fact yours that we're asking. You can also write to us on any one of our social media platforms, and indeed on YouTube, which is live right now. The first question we're taking is from Saurav. He's writing in from Delhi, and he's bought SBI cards at levels of 879 and Happiest Minds at levels of 1084. Should he hold or sell is the question. Osho, I'll come to you on this one based on the charts. What is the recommendation that you would give him?
See, firstly, for SBI cards, this counter has been into a corrective phase. From the zone of approximately 950, there has been no looking back to the counter, and from there onwards, it has came down towards the zone of 700. But if I'll be talking about the historical support, then the same zone near about 690 to 700 has acted as a decent support zone for this counter. So from here onwards, I'm expecting that the downside is very limited. More 20 points of downside can be seen in a further correction zone, but overall we can expect that from here onwards a sign of reversal or relief can be seen. But on the higher end, a massive resistance is present around the zone of 760. So until it surpasses the zone of 760, we are not very much bullish in this counter. But the time it crosses 760, from there onwards, we can see a very strong reversal for immediate upside target of nearly 920 to 950 levels.
All right, got it. Next up, we have a question from Mohit from Ludhiana, and they're talking about the stock NMDC. Now, this is from a longer term perspective, Rohan. So, they've bought the stock at 136 levels, and post the demerger, they also got off NMDC Steel. They got 500 shares of that as well. The time horizon is 2 years into the stock. If you look at the stock trajectory of NMDC, in the last 1 month or so, it's only been on a downward trend. But Rohan, from a longer term perspective, a 2-year perspective, what would you suggest an investor to do with these, both the stocks now, NMDC Steel and NMDC as well?
So not tracking NMDC Steel, so not much aware about it. But for NMDC, I think so there is a sure turnaround which we are seeing into the company. The numbers have been better. The price also has been, supporting the numbers. I think so for a long-term point of view, NMDC could be a great hold with a better number and a turnaround story. Also, investors should expect a good consolidation period also for 1 or 2 quarters, because the stock has done exceptionally well for last 2 to 3 quarters. So positive on NMDC, no idea on NMDC Steel.
We've got NBCC that a view is being sought rather. Parag Joshi is asking about this, and also Engineers India. He's holding on to both of these, NBCC, which he's bought at levels of 67.25, and Engineers India, which he's bought at levels of 142 or thereabouts. Should he hold or sell? Because he's not really given us a time frame. I'm going to you, Osho, based on the charts. What should he do with these two?
See, firstly, NBCC has seen a very drastic vertical rally from the zone of 80 towards 180 odd levels, and from there onwards, it has even retracted more than 50%. So I'm expecting that on the downside, the technical developments have partially cooled off. The counters or the technical developments have came down towards the oversold territory. So I'm expecting that from here onwards, the downside is very limited. Approximately 95 to 100 is the very strong support zone for this counter. So one should definitely hold it for a short to medium term perspective. On the higher front, I'm expecting a target of nearly 135 to 140 from a short term time frame. And which was the other counter?
I'm just trying to...
Engineers India.
Engineers India, yeah, that's right.
Yes. For Engineers India, again, this counter has seen approximately more than 50% of retracement of the rally. But from here onwards, the downside is again not very far away. I am expecting 175 should be acting as a very strong support zone. 2 reasons. One is the 200-day SMA is placed around the zone of 170. And second, the counter have already seen a decent correction. So time-wise correction has been seen. This counter has cooled off from the technical parameters. So I'm expecting that from here onwards, there will be a gradual move, not very aggressive on the targets, but on the gradual move, the primary trend is likely to continue 210 to 220 is the immediate resistance for this counter. Once it surpasses those zones, then one can expect 250, 60 kind of a targets.
All right. The next counter that we're talking about is Hindustan Unilever. This one's from John from Chennai. Now, Rohan, we've seen the stock price in the last couple of sessions, actually more than that. It's been on a downtrend, and it's down today as well, about 1.5%. But from a longer term perspective, here also the time frame for John is 2 years. We've seen a bit of a slowdown in the FMCG sector, but do you think that story is going to change? And how much do you think HUL is going to benefit from it? And would you suggest accumulating at these levels if somebody has already bought into the stock?
Yeah, see, HUL has a very unique story. It has been a great compounder, great company. But now what is happening, if you see across, is the startup companies onto FMCG has come over so much, and people want different choices to look forward for. And HUL doesn't give a lot of choices for it, looking forward for some unique blend of products. It could be, from environmental friendly to, a lot of hundred of things. And, if we see our choices of what we have bought in last 2 years, it would be much unique choices in comparison of Hindustan Unilever. So on that zone, I think so we need something turnaround into the story, which we are not finding. See, numbers are decent. It has done a 10,000 crore of PAT. That is brilliant because it's a pure supply chain story. But as of now, if you see on revaluation side, we don't see anything into it. So as of now, we would be on the sell side, no for accumulating also Hindustan Unilever for longer period of time. Let's wait for the story and then decide. Okay,
fair point. The next question is from Raghuram Patro, who's asking about ITC as well as Tata Power. ITC has been bought at levels of 404, which is below the current market price. And he's got 5,000 shares, and he's got Tata Power 1,000 shares at 392. He's looking for a medium-term view. I will come to you, Osho, on the charts. ITC is still about 100 rupees or thereabouts away from its all-time highs. What should the medium-term strategy be, and also in Tata Power?
See, overall, ITC have seen a very strong rally in 1.5 year kind of a time frame. And from the past 8 months, the counter has been hovering in a very narrow zone of approximately 460 towards 400 odd levels. But if I'll be talking about the retracement, then the retracement still shows that the counter has the potential to test the zone of 380 in the coming future. That should be acting as a very strong development for a bullish market. So I'm expecting that even though if the counter comes towards 380 odd levels, one should definitely try to accumulate it for a longer duration, because on the price extension, the stock has the potential to firstly retest the 440 odd levels, and from there onwards it can even go towards 490 followed by 540 from medium to long term perspective. So in shorter duration there can be some consolidation or correction that can be seen in ITC, but for a longer duration one should definitely try to accumulate it in a staggered manner till 380 odd levels.
Got it. Next up, we have a question from Raj from Chennai, and we're talking about HDFC Bank. Now, this is a common question on this show. Pretty much every day we have questions around this counter. Rohan, this one specifically, for the longer term perspective, should you buy on dips for HDFC Bank? And if there are any picks in the PSU sector?
No. I asked, let me clarify, so sorry, because maybe my message wasn't clear. I asked him whether he's holding any other banks, and he said that he's holding about 4 banks. By the way, these are all public sector banks, and he's making a decent profit in all of them, about 20% or thereabouts. And I think he's wondering whether to add HDFC Bank at the current level and to keep buying on dips. So that is a question. Should he do that, Rohan?
So first of all, buying at dips is a way I don't recommend anyway. It's like a half confidence we are showing according to a stock, specifically in a SIP way of a mutual fund or an ETF. It's still okay. So coming back to HDFC, what I'm not recommending is only thing that we've been very internally. We did scuttlebutt for 3 months of what HDFC is happening. The two merger of the culture of HDFC Bank and HDFC is going to be still 1 or 2 years ahead of the time. It will take still the merger to happen. Also because of the merger, I don't know why it was been done, but because of that, there are certain complications onto the NPA side and certain complication to the money management side. So for that all reasons, I would wait for the time where the things are still getting better to it. So as of now, I would not accumulate and not recommend also to the portfolio. Rather, I would go forward for a PSU bank or an Axis Bank or an ICICI Bank.
All right, fair.
Got it. We'll slip into a short break now, but we'll take more questions on the other side. Stay tuned. Welcome back. You're tuned into Ask Profit. Let's start with the questions. Next up, we have a question from Bhaskar from Telangana. This one's on Canfin Homes. They've already bought into the shares at a price of 813 a piece. It's currently trading at 703. So quite a bit of a... I mean, they've bought it at elevated levels, clearly. Now, from a shorter-term perspective, Osho, would you suggest holding on to it? And what levels should you watch out for in this specific stock?
See, overall, the NBFCs have seen a kind of a correction. They are into a correction phase as of now, and I'm expecting that this should continue for coming 1 to 2 trading weeks. For Canfin Home, 700 is the last psychological mark that should be acting as a support zone, below which it has the potential to even plunge towards 660, 670 odd levels. So I should it's advisable to keep a strict stop loss of 700 odd levels. If there will be any kind of an authoritative plunge below 700, then another 30 to 40 points of fall can be seen in Canfin Homes for short-term duration. For longer duration, yes, one can definitely hold to the counter because the downside is limited to 5%. And from here onwards, if there will be any kind of reversal in the overall NBFC space, then this counter has the capability to move towards the zone of 720, followed by 750 odd levels. But that too, if it reverts from the zone of 700. So better to keep a strict stop loss of 700, and then one can definitely keep this counter for short-term period.
All right, Rajendran's got the next question. He's asking about Natco Pharma, if we can pull up the price right now. He's looking at the next 3 to 5 years as a time frame, and he's looking at buying this based on the fundamentals. The question is for you, Rohan. How do you look at this particular counter as compared to its peers?
Yeah, Netco Pharma, if you see on specific, in comparison, as you told rightly, that into the comparison of the peers, I think so still a lot of other companies like Zydus Life, not very extremely peer-to-peer comparison, but on the mid-cap side, Netco Pharma, in comparison of it, a lot of other companies looks good. So maybe Zydus Life could be a best choice in comparison of Netco Pharma.
All right. Next up, we have a question from KG Vargasi, and this one's on PVR Inox. They've bought the share at 1,677 a piece. Elevated levels, Osho. Would you suggest holding on to this counter from a shorter term perspective?
See, overall, the counter has given a breakdown from the zone of nearly 1350 odd levels, and I'm expecting that on the downside, it has the potential to test the zone of 1220. For short-term perspective, it is advisable to exit and accumulate it at a lower levels of 1220, 1200 odd levels. But if the view is for longer duration or for investment perspective, then stay invested, try to accumulate more on any dip towards 1200 odd levels.
All right. The next one is on PVR Inox, and we got Mr. KG Varghese. Okay, it's already done. Tata Motors is the next counter we're looking at. Prabhavit from New Delhi is asking about this, whether or not it can come back to 1050 levels. What are the technical indicators suggesting, Osho?
See, overall, because of the sell-off in the Tata Group, there has been some kind of pressure for the day in Tata Group companies. But overall, the technical structure is very positive for Tata Motors. And I am expecting that these kind of plunge or these kind of sell-off should be attracting the buyers. For Tata Motors specifically, it is having a very strong support around the zone of 925, 930 odd levels. So if there will be any kind of further correction towards 930, one should definitely accumulate it. For immediate upside target will be 990, 1000, and above that one can definitely look for 1050 from medium term time frame, not very aggressive target in short term.
All right. Next stock we're talking about is a new listing, which is Popular Vehicles, which got listed today at a 2% discount to its IPO price. Now, Rohan, if you've had a chance to look at this, we have a viewer, Anirudh, who has bought 1 lakh shares of Popular Vehicles, and they wish to hold it from a 3-month perspective. So kind of a short-term perspective here. But if you can give us a little bit of an idea about fundamentally, what do you think about this counter? I understand it's a short-term query, but still.
Sorry, ma'am, I don't track the company.
All right. Now, since this is the recent listing, we'll move on to the next question. Next up, we have a question from Venkat Ramani from Bangalore, and this one's on 2 stocks, IR Infra and JMR Infra. This for a shorter term perspective, Osho. These 2 counters, do tell us the levels that you should watch out for.
The first counter was
IRB Infra.
IRB Infra. Okay, one second.
Let's pull up the chart. All right. So, in fact, let's pull up the longer term charts also of IRB Infra while we're talking at it. Now, about 1.5% in trade today. And if we can pull up the key levels, it's done reasonably well over the last 1 year. Osho, have you pulled up the chart?
Yes. So basically, IRB Infra has been into a positive trajectory, currently having some kind of profit booking or correction for the time being, but it is having a very strong bullish gap near the zone of 52, 50 odd levels. So any dip towards the zone of 52 should be acting as a initial cushioning for this counter, because on technical fronts, majority of the technical parameters has cooled off from the overbought territory towards comfortable and even towards the oversold territory. So from here onwards, there can be some kind of surge in the counter that can be seen, not very much aggressive on the targets because recently it has seen a very drastic up move, but on the very short term perspective, 62 to 64 should be acting as the first target or resistance for the counter. Once it breaches the zone of 64, then from there onwards, one can expect a target of 69 to 70 in the coming future.
All right. Okay. We've got Venkat. Okay, we've taken Venkat Ramani's question, right? Let's go to IOC, which we've got a question from Beam on, and he's bought at levels of 177. Should he hold or should he exit? The reason I'm going to go to Rohan on this rather than take a technical view is that we've got a significant development in the recent past, and we've seen that the oil marketing companies have been under a little bit of pressure since then, and that is a reduction in the prices at the pump that we've seen. Rohan, what's your view on the fundamentals on IOC and also on the space?
Yeah, see, whatever we had seen, the correction is because of the price rise, and I think so. That's a in short-term point. They look at the valuations and the way the growth is going to happen. We believe it's a very good stock to hold on to. Everything looks very positive. It from the cash flows to the turnaround story to the valuation currently right now. It's a positive from our side. Hold for a longer period of time.
Right. Next up, we have a question from Ashish from Surat. This one's on Crystal share. Now, they say they've bought the stock long back, and they bought 750 shares, and if we can pull up the chart, yeah, it's currently trading at around 4,900 levels. From a longer term perspective, what's the story that you see here? Rohan, would you suggest holding on to something like a Crystal?
Yeah, I think so. It's one of the most fantastic company looking around how the India SME and MSME are growing, and we need a credit rating agency. I'll give you a very shocker thing. There are only two companies in US who have AAA plus rating, and if you see in India, there are a lot of companies. We need a rating policies, strong rating agencies in India with strong background. And CRISIL has been the highest share, market share, and the way the company is growing has been fantastic. So it will not do good when the economy will not do good. It's very clear to it. But the economy, what we see in next 5-6 years has been brilliant. So CRISIL will be a very big contender for India growth story. So positive from our side.
The last question we're taking is on Adani Enterprises. This is from Arvind. He's writing in from Andhra Pradesh. He's got 100 shares which he's bought at levels of 3,308. Slightly elevated levels. Based on the technicals, what should he do, Osho?
Definitely Adani Enterprises have seen a very good recovery from the lows, and obviously it is having a cycle of higher highs, higher lows. So the recent plunge that has been seen in this company should be acting as a very strong support zone, because it has reverted from the 100-day EMA on the daily chart, which historically have seen a very strong support zone. So I'm expecting that from here onwards, there can be some gradual and consolidated move that can be seen. But from medium term perspective, definitely 3,300 can be seen on immediate basis. And above 3,300, even for medium term perspective, one can even see a higher target of nearly 3,380 should be the first target, followed by 3,450, 3,460 odd levels.
Okay. All right. Thanks, Osho, for that. And by the way, standard disclaimer, NDTV Profit, the channel that you're watching, is part of the NDTV group, which is owned by the Adani Group. That brings us to the end of this particular edition of Ask Profit. Rohan as well as Osho, thank you so much for the answers that you did provide to our viewers today. And by the way, if you did not get your question answered today, hopefully the other questions that we discussed on the program have benefited you in some way. And we'll be back tomorrow at 11:30 to take more of your questions, so you can tune in at that point. Lots more coming up over the course of the day from Smriti and myself and the team that put the show together. Thank you so much for watching. This is NDTV Profit.
Markets continue to extend losses. Nifty falls below 21,900, while the Sensex sheds 500 points, trading near 72,100. It's a sea of red among sectors, dragged by IT, pharma and oil and gas, while metals reverse gains to trade in the red as well. And shares of TCS slip over 3% in trade after 2.02 crore shares changed hands in 5 last trades. Stock hits lowest levels since February 27th. And Japan exits world's last negative rate regime. Bank of Japan hikes interest rates for the first time since 2007. Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade and all the stocks which have been the flavor of the season. But before that, a quick look at the markets and how they're faring. And it's been a quiet day of trade. Sure, the Nifty is coming off by around 1%, but on the whole, overall, you haven't seen too much of a change. Besides that, and as I've mentioned, even in terms of the other benchmarks like the Bank Nifty or the Fin Nifty, they also have a relatively quiet day. It may look choppy, but these moves are not very, very extreme. And as far as the the Fin Nifty is concerned, that will also be in focus because of your weekly options expiry in today's day of trade. So that's something that you can keep an eye on. And let's talk about the Nifty then. Let's talk about the constituents of the Nifty, the contributors, where you have that pull and push coming through. Naturally, considering the Nifty is losing out as much as 1% right now, a lot of that pressure is on account of Reliance Industries. Sure, one might expect TCS, which has a relatively heavier cap and is relatively heavier weightage on the Nifty, is also weighing down on the index. Infosys as well is down, along with something like an L&T. So if you just consider those 4 counters, that's the bulk of the losses that you're seeing as far as the Nifty is concerned. What is also providing a marginal support to the index is Bajaj Finance, HDFC Bank, and something like a Bharti Airtel. But all in all, another weekday of trade. In fact, the Nifty now is inching further towards the mark of 21,800, where a lot of technical analysts have suggested that that's where the support is. What about the broader markets? Let's take a look at that as well and see where, in fact, there is a lot more traction there. So the broader markets are clearly moving in line with the Nifty. In fact, a little bit of an underperformance. So the mid-cap index is down around 1.3%. And something like the small cap index, that is also under pressure at the moment. And we are looking at a decline of around 1% there as well. Even in the broader markets, we do have a lot of weakness in something like a Patanjali Food. That's down around 4.5% right now. L&T Technology Services is down around 3.8% as well. It's very recently raised funds. And Astral is under pressure. That's down around 3.6%. Along with something like a PFC and REC. PFC and REC, of course, which have been the flavor. And in fact, the top gainers through the course of the last 12 months are now genuinely starting to see not just some profit taking, but also a little bit of weakness seeping in over the last couple of weeks coming through. So we'll be watching out for that. On the gaining end, we do have Paytm, which is up around 5%. And besides that, not too much to speak for as far as your gains go. Something like a Balakrishna Industries, Max Financial Services, Oberoi Realty, all of them gaining less than 1%. That's it. What are we going to talk about in today's edition of Hot Money? Well, we will be talking about TCS, HDFC Bank, Piramal Pharma, Aditya Birla Life, Sun Life, as well as Philips Carbon Black, that's PCBL. And we will also be taking a stock of how things are panning out for the two-wheeler companies as well. And to take us through that, well, we have with us Vineet Bolinchkar of Ventura Securities, who will be joining us. Vineet, good afternoon. Thank you so much for joining in. But Vineet, before I come to you, let me address what's happening with TCS. And of course, the shares have come off by quite an extent, and this is largely because of those block trades coming through. But I'm going to say no more and get in my colleague Vishwanath to give us an update on this one. Vishi.
So Tata Sons is likely to have sold about 2.3 odd crore worth of shares in TCS. Now, this was, of course, reported last evening through sources that Tata Sons will be looking to offload some part of its stake. Remember that Tata Sons owns about 72.4 odd percent in TCS, and what they were looking to sell represented just about 0.65%. That was worth around 9,300 crore. Why is Tata Sons doing this? Well, what sources are telling us is that the proceeds from this sale will be used to retire some of the debt on Tata Sons' balance sheet, which will aid in the process of avoiding a mandatory listing. Of course, alongside the share sale, Tata Sons will also have to undergo some amount of corporate restructuring, move the financial services businesses into a separate holding company, just so that they can avoid that mandatory listing, which is, according to RBI norms, supposed to happen before before September 2025. Now, if that is a process that is being followed, then Tata Sons will escape that mandatory listing and will likely have some amount of restructuring within the financial services businesses.
Okay, Rishi, thank you so much for joining us and taking us through the latest update there. Vineet, welcome to the show. Your view on TCS, how are you looking at things? It's currently inching towards the 4,000 rupee mark. Keeping the prospects in mind as well as valuations, what's your take on this counter?
So, we've seen a lot of overhead supply come in, and that has kind of contributed to the, institutional appetite kind of drying up. And with the March end trades happening,